All right. This one's a tricky one. So, what is an offset account? Everybody talks about offset accounts. It's probably one of the most requested things we get, but most people don't fully understand how they work, and that's because they are a little bit complicated. I suppose the hardest part is that it is a money saving exercise, and when you're borrowing money from a bank, it's always like, well, isn't the bank trying to take my money? The short answer is yes, of course. But the way offset accounts work is actually you have better access to your money. So in a way, it's a way of the bank getting you to spend. But if you're smart, it can actually help you save a lot of money. So in terms of how it works, basically you'll have an offset account, which is a transactional account. So if you think like if you're with CommBank or ING or NAB or whoever the bank is, you'll get a bank account with a BSB and account number. So it just works exactly the same way. You've got an ATM card, it's in your internet banking. You can transfer money in and transfer money out. It's a fully functioning transactional account. The difference is that right now, if you put money into your transactional account, you might get paid, 1% or 2% or whatever the interest rate is on your return, if you're lucky. Whereas with an offset account, it's going to offset against the interest rate on your home loan. So if your home loan's 3% and you have, $1,000 sitting in the account, then you're saving on that $1,000. You're saving 3%, so $30. So and that's based on an annual figure. So obviously, the more money that you have in the offset account, the more savings that are there. Now, there's a few reasons why an offset account is important. So if you're buying a home, you may want to say borrow a $500,000 loan, and you want to have $50,000 left over for renovations, holidays, or just in case money. That 50,000, if you've got nowhere to sit that money, well, you're just going to be paying interest on the home loan for the extra amount that you've borrowed that maybe you didn't need. So in this illustration here, for example, you can see there's a $20,000 balance in this offset account. The mortgage is $150,000, and so the interest is only charged on $130,000. So that means you're paying your loan off quicker. Now the thing is that it's a really a good way of being able to access your funds. Those funds are available instantly, just like a transactional account is. Although some banks do charge package fees as a result, you might get a discounted rate, but you also get a fee-free offset account. So our job really is to balance those out. If you just let us know, yep, I'd like one, or no, I wouldn't, then that will help us, fine tune those products as well. But generally speaking, most lenders will offer an offset account. It's a pretty handy function to have. Now, if you're an investor, if you're not an investor, you can switch this video off now. But if you are an investor, where having an offset account is really good is that, say you're borrowing $500,000 for an investment purchase, and say that you have no other loans. So you don't have a home loan or any other loans, non-tax deductible loans to pay off. You can actually pay money into the offset account and say that you pay $100,000 off, and it's offsetting that, say, the $500,000 investment. So you're now only paying interest on $400,000. But then if later on you want to go and buy a home, you can take that money back out. You're going to start paying interest then on the full $500,000, but that $100,000 can be used as a deposit elsewhere. So, it's a really good flexible way of being able to do it. And the beauty is that $500,000 loan, if it's an investment, is usually tax deductible. And so if you pay the loan down instead of the offset account, if you pay the loan down and you want to re-borrow that money for non-tax deductible purposes, you've now gone from like a $500,000 loan down to $400,000, and now you borrow an extra $100,000 that's non-tax deductible. So now there's less tax that you can deduct. Tax deductions are a whole new complex beast. But I suppose the short answer is, should you have an offset account on your investment? I would usually say yes if you can. But yeah, it's definitely something to consider.